Welcome in Abhijit Roy, the MD and CEO of Berger Paints. We've got lots to discuss with Mr. Roy this morning, with earnings having coming in and also, more importantly, the outlook on demand going forward. Mr. Roy, good morning and welcome. Now, while April was a washout, what's the kind of revenue growth that you're starting to see now in May, in June? You know, what kind of pent-up demand? What's the outlook going forward when it comes to the revival as well?
So April, yes, was a washout, and unfortunately for us, we have a fairly strong sales in April every year. Almost 45% of our sales comes from April value, so that was wiped out completely. May, we recovered to almost 90% of the value of last year. And then, in June, we were on positive growth, double digit, both in value and volume. And then July, there were some lockdowns in the East, so we still have the growth, but in single digit in terms of value, and volume growth was double digit. August looks good so far, so it looks like that, we probably might have a double digit growth.
Okay, great. So how far are we, would you say, from pre-COVID levels? If you could give us a sense of really how things are shaping up.
So actually, just before COVID, things had slowed down a little bit in the third and the fourth quarter. Compared to that, we are better off, in terms of demand. Probably, some amount of demand has shifted away from April. It doesn't get destroyed as such. It would have been postponed. So some lingering effect is there. But as of now, it looks like that, we are back to normal almost. Except, of course, for auto, where we still have a negative, growth rate. But the rest are back to normal, and probably decorative we are doing, slightly better than normal.
Sure, understandably so when it comes to the auto segment. But how's the sales mix trending now, Abhijit, and are there entry-level products wherein there is, problem resolution products like waterproofing, etc., which may be perhaps doing better? And what is the growth when it comes to the premium as well as the decorative segments for you now?
Yeah, so initially you are right that, much of it was entry-level products and enamels and products of that type, in the month of May and June, which were selling mostly. But from July, slight improvement, and August we see a tangible improvement in the premium luxury category also, and it has started selling now reasonably well. As far as the waterproofing segment is concerned, that it has enormous potential. I think we are also fairly placed. Our acquisition of STP is also coming in handy now. And so between the two of us, Berger and STP, I think we have a fairly strong presence built up now in the waterproofing segment. And we would like to grow in this segment rapidly.
Morning, Nikunj also joining in. My question is that the paint category or this industry has surprised everybody. I looked at numbers from Asian Paints. If I analyze what you are essentially indicating, why is that when everybody is feeling the heat of slowdown, we are not getting a very bullish commentary from auto companies or from mobile companies, or for that matter, white good companies? Paint industry is using the right words which will excite investors. Demand is back, growth is back, things are looking up.
Well, difficult to say, what can I say, because, the demand is looking up and we are growing. Possibly because of two things, I've always maintained that, one is that, of course, ours is mostly repainting jobs. And, many a times, though it falls within the discretionary at times, but I feel that, it is more of a compulsion that, if your house is looking shabby, it is, also unhygienic, if you have walls peeling off, there is dampness on the wall. So combination of waterproofing and painting, I think, is more of a necessity. People don't just, paint for the heck of it. Some do, but, most of them do because it looks shabby and it looks unhygienic, in the current circumstances, and therefore you need to paint. So there is a, as soon as constructions happen, every 5 years, you have to probably, or 6 years, you have to repaint. And that happens across, and it's not true only for India. I presume it is across the world that, paint industry has been doing reasonably well.
Fair point. I mean, while I'm excited to bring this point out, I hope my curiosity around good news also was very high. You also are a paint company which has presence in the auto sector. One of your subsidiaries essentially is catering to the auto sector. Are you also getting a equal amount of optimism, or do you have equal amount of optimism for that end of the business?
So, auto, as far as, two-wheelers and cars are concerned, it is, coming back to almost normal levels, at least, to last year levels. It was like 40%, 50% down now, or even more, but it has now come to nearly last year level in the two-wheeler and the, cars category. However, in the commercial vehicle category, it is still substantially down. So it's like a mixed bag as of now.
Okay. The difference between 2017, 18 and 19 is that this time there is a genuine and a smart recovery in rural India. How will this change dynamics for your portfolio, your category, and also volume growth? Because rural India is mass, but they not be a premium category.
Yeah, so you are right, that the initial, which was comeback was led by the rural markets, the semi-urban markets sort of, the tier 2, 3, 4 cities, they also started doing well. It is true that, there is a slightly higher percentage of mass products which sell there. But it is also true that in many of these markets, premium luxury emulsion, the way we term it in paint, also does quite well. There are many markets, especially in the richer states, even in the East, for example, which is not considered to be so rich. You will be surprised that, actually the luxury emulsions for exteriors and for interiors, sell much more possibly in West Bengal than, say, a relatively prosperous state. So it is a strange combination which keeps happening. Probably people use good quality products. They do painting once in 7, 8 years, and they don't mind paying little bit more, because it doesn't in the per square feet cost if you look at it. And then if you divide it by the number of years of life that it lasts, it's hardly anything. If you go for so for example, a luxury product is selling at 300 rupees, and a normal premium range will be 200 rupees. And if you go down further down the ladder, it will be 130, 140. But then the coverage of the luxury product is much higher. So at the end of the day, per square feet cost is not very high compared to what you would pay otherwise for an economy category. So a lot of people go for luxury products even in the smaller towns and villages, and the percentage is reasonably high. Yes, in the urban centers it is even higher, but that is coming back also gradually back to normal.
All right, Mr. Roy, you do import about 10% of your raw material from China. So any change in acquisition strategy there, any increase in cost on the back of that?
So yes, we do import about 6 to 7% out of China typically of our total raw material import. We are looking at alternative sources and keeping it ready in case situation comes to that. More or less we have, except for 1 or 2 raw materials, I think almost everything else we do have a substitute ready, and it's just the price is cheaper if you are getting it from China, but it's not a very significant portion of our imports.
And the outlook on margins as well, given what we are seeing on the decorative paint volume side, a little slower in terms of growth there. Is all the high cost inventory out of the way?
Sort of, yes. In fact, I think the second quarter will be relatively much better, both in terms of we'll have a top line growth for sure, and the bottom line will also look much better.
Also wanted to understand what's happening when it comes to your overseas subsidiaries. Nepal has done well, as we understand, in the fourth quarter. You'd expanded the UK business as well, plus also made some acquisitions in waterproofing segment. How are things looking when it comes to the global businesses?
So Nepal was doing well, but in the first quarter results that you are seeing, that did very badly because it was locked down for almost the entire stretch from their period is March 15 to June 15th, and it was almost like they got only 10 or 12 days of sale, and so therefore the Nepal subsidiary did poorly in quarter one, but already coming back strongly. This month they grew very well, and therefore it's like 30% plus growth, and so it's coming back to normal levels in Nepal. Nepal is a subsidiary which has been doing well right through, and no major cause of worry there. And it's doing well. The Polish subsidiary has come back very strongly. It did well in the first quarter as well. We have a step down subsidiary of the Polish operations now in UK as well. And that's also doing quite well. And so the Polish one, which is in the external insulation finishing system, which is a energy saving type of a thing, is doing quite well now. Russia had a bit of a trouble, not so much because of the operations, but because of the ruble depreciating. So we took a major hit in the first quarter of about 17 crores, which reflects in our consolidated results in terms of profits. But that will already reverse now to some extent. In the first quarter, we are already 8 crores plus because the ruble has now started appreciating a little bit. So it's an basically ruble which was depreciating against the USD, which was creating a little bit of an issue. As far as other subsidiaries are concerned, SDP is doing quite well. It's the waterproofing area, as you rightly said, and that continues to do well. And we are going to strengthen that particular arm. It is primarily into projects of waterproofing, and it is already it has its name across all the CPW, DPWD, government infrastructure everywhere. It is already prescribed brand, and it can do quite well going forward.
Okay, closing comments. While we are trying to understand from all the managements that has demand gone back to pre-COVID, but in your case, I would like to understand that when will demand go back to 2018 or early 2019 levels? Because for me, 2019 was a bad year. In 2020, the first couple of months have been challenging. So the real test is going to be, when will you go back to 2018 and early 2019 levels?
We are quite hopeful. In the third quarter itself, we might see fairly good results coming in from our side. Whether it will go back to 2018 level or not in terms of the results, it's very difficult to predict at this stage, because it will also depend on how the disease moves and how COVID is brought under control, whether the vaccine actually materializes, whether the spirit comes back. So it's a very, very difficult call. But our third quarter and fourth quarter results should be progressively getting better. So from second quarter will be positive for sure, and then third quarter will be hopefully a much stronger double-digit growth.
It's so great to hear that. Trust me, it's so great to hear that. Final question. Most of the companies we've spoken to, they're saying the following, that look, when the COVID crisis happened, we realized that we were sitting on costs and we can live without those expenditure and costs. Are there any such costs which you've identified which earlier were part of your manufacturing cost, part of your advertising cost, where the cut is going to be permanent and this COVID crisis will only help you expand and save those costs, expand margins and save those costs permanently?
Yeah, that's right. So there are many areas which we have looked at, and in the lockdown period, it was a good exercise to get into. We did a lot of things, in a lot of training, a lot of cost rationalization, a lot of new thinking as to which are the areas where we can really contribute much more. And out of that, this is one exercise which we did. So rental, travel, of course, has been forced on us. But that's a cost which will permanently probably go down substantially because of the work from home facility which has come in, and now we are quite used to this, and people are liking that as well. So hotel cost, travel cost, rental cost, cost even on raw materials which we managed to negotiate better. So there were many costs which I think which we have looked at very seriously. When things were going very well, you don't tend to look at that, but when situation is tough, you become much more alert to this. and those costs, whichever we have now seen, is probably going to last for a longer time.
All right, really appreciate your time, and thank you for being frank, honest, and thank you for sharing great news on the economy side that things are looking up. Paint is a category which is a clear indication of mood and also necessity. So now that things have stabilized, the necessity demand is making a comeback, and that is what I think the management of Berger Paint was just alluding to.